Welcome back. It's time now to take a look at the top business stories. UAE rents forecast to drop in 2011. Dubai duty-free posts 4.66 billion dirham turnover for 2010. And we speak to the CEO and founder of Spendwiser about the UAE consumer. The GCC markets ended higher today and there were positive results across the UAE bourses. The DFM was up 2.25% to close at 1,668 points on the first day of the trading week. The property sector witnessed positive results today as MR Properties gained 3.25% and Arab Tech was up 3.5%. Dubai Islamic Bank rose by 1.75% and Emirates MBD gained nearly 8%. Air Arabia rose by 1.5%. 120 million shares were traded, valued at 176 million dirhams. And over in the capital, the ADX gained 0.75% to close at 2,741 points. Aldar Properties closed by 2.75%, while Suru Real Estate rose 1.25%. The banking sector also posted gains today as Abu Dhabi Islamic Bank rose by 1% and Abu Dhabi Commercial Bank was up 1.5%. Dana Gas rose over 1.75%. 62 million shares were traded, valued at 86 million dirhams. The UAE is set to see a further decline in rent this year. There is still uncertainty among property owners and landlords about what new supply coming into the market will do for the real estate industry. Rents in Abu Dhabi are expected to drop further, even though demand surpasses supply. And in Dubai, the rental market is not expected to recover, with industry experts suggesting further declines in the residential market in the year ahead. And Dubai Duty Free has begun the year on a high note, announcing double-digit sales growth for 2010, with a turnover reaching a record 4.66 billion dirhams. The number one selling category was perfumes, which saw sales of 658 million dirhams, a 16% increase over 2009. Liquor and gold retained the number 2 and number 3 positions, with increases of 13% and 11%. Other big category increases were seen in watches, which rose by 26%, and cosmetics, which were up by 23%. December saw a 13% increase from the same time in 2009, with a turnover reaching 497 million dirhams. And the Great Place to Work Institute today released its inaugural list of top 10 companies to work for in the UAE. The research and management consultancy ranked the nation's 10 best employers based on confidential feedback from staff surveyed and an independent culture audit of HR practices by the institute. UAE-based companies from a wide range of industry sectors participated in the program in 2010. Of those companies recognized, half are UAE-based firms. Topping the list with the highest levels of employee trust was Microsoft Golf, followed by FedEx, PepsiCo Asia, Middle East and Africa, and Marriott. And in our fast financial news, the TRA has received the British Standard Certification for implementing the business continuity system that helps businesses continue to trade throughout challenging and unforeseen circumstances. The BCM system ensures continuity of service provisions that will aid constituents to follow standards and implement management systems that will aid various high-risk sectors such as finance, telecoms and transport, where continuous operations are vital to the industry. And the Rotana Group is set to open 7 new hotels in the UAE and Qatar this year. The company currently owns 41 properties across the region and will open 6 in 3 Emirates of the UAE and 1 in Qatar, and has further plans to expand across Oman, Syria, Bahrain and Jordan. The company now manages more properties than any other operator in the UAE, with 10 hotels in Abu Dhabi and 13 in Dubai. And after the break, we speak to Rohit Dev, the founder and CEO of Spendwiser.com, about the importance of word-of-mouth marketing and research for consumer needs.